Gentlemen, thank you so much for joining us here on Startup Central, $100 million top-up fund. If I can come to you first, Nishant, what exactly do you mean by a top-up fund? Does it mean that you're only going to put investments, you top up your existing investments, that's why you've gone in for this fundraise?
I think that's where it started. We're fortunate to have some of the largest at-scale companies in our portfolio right now. And so we started there, but as we've had conversations, there's so much excitement about the India SaaS and B2B market that we actually have raised a larger round so that we can do new investments as well.
So Mohan, these are going to be fresh investments. You're looking for new companies to invest in?
Yeah, there'll be a couple of new companies which we have already announced as part of this fundraise. Okay? A company called RateGain and another company called Sense. These are new investments. And there will be at least a couple of more follow-on, which we will announce in the next couple of months. So it's a mixture of new companies and follow-on.
Ask both of you first. Nishant, you just... Okay, so it's going to be a mix of old and new ones that you're on the hunt for. But Nishant, I want to also get, and I want to actually get a sense on this from both of you. I'll begin with you, Nishant. So when you went out to raise this $100 million top-up fund, did you see any change in mindset on how LPs were looking at India? Did you go primarily to domestic LPs? Are these foreign LPs?
Yeah, so two questions there. The constitution of our LPs, and so for the LPs we went to are European and American large institutional investors, so not really family offices but large funds, because the idea was to actually grow our LP base so that when we go to Avataar Fund 2, they would support us, and that was the intention.
Yeah, to add to that, these are LPs which we had met before when we were raising Fund 1. And so we just selectively went to about 7 or 8 LPs which we had a relationship with. And our target was to come close to 100 million. And we achieved that. So, and we did that with like few LPs. We didn't have to cover more than 4 or 5 to get this fund closed, along with Harbour West, which is our current investor.
But so when you went back to the 8 odd LPs who you have great relationships with, are they more bullish in India than when you last were talking to them for checks? Nishant, I'll let you.
Yeah, that's a great point. I think that was the first part of your question. I think there was a marked change from when we were first pitching sort of end of 2018, early 2019. We had to explain a little bit more about SaaS and India. And now there's been a marked shift thanks to many growth stories like Freshworks just announced today they're 300 million, they passed 300 million. So I think the proof points have come in, and now there's actually inbounds from new LPs as well. Like Mohan said, we've kind of only restricted it to few folks that we had relationships with, but there's a lot of inbound interest, in terms of the Indian SaaS and B2B ecosystem. And so we think that wave is just starting, and we caught it exactly at the right time.
Mohan, are you in the new fund going to be as bullish about SaaS? Is that going to be a big focus area?
Yeah, you know what? Look, we started out with doing late stage SaaS. It means like we come in Series C and beyond, not Series A and B. That will continue to invest, right? And the 2 companies we just announced are actually SaaS companies, new investments. But I think it's going to selectively add B2B marketplaces, right? We do have one company in our portfolio called Elastic Run, which is a B2B marketplace. So we see a lot of interest and a lot of companies being formed, right? So we will expand to B2B marketplace and then selectively to B2B to C models, right? There are a lot of companies in EdTech and health tech which sell into institutions, but at the end, there is an end consumer in the picture, right? So we will not go directly B2C, but B2B to C in health and fintech will selectively look at.
Mohan, if I can now come to you for this question, I'm going to actually get both your views on this. Now, there has been all of this talk on exits still being an issue when one invests in Indian startups. Has that started to change? You're hearing about big acquisitions that are now taking place. The Prime Minister's indicated there will be direct overseas listing. We're still waiting for the guidelines and the laws and all of that. But would you say the mindset around that has changed, or is it still a massive area of concern? Because when the boom started for this ecosystem, it was a couple of years ago. So the gestation period, the typical gestation period, is coming to a close.
Let me take that question first. So on the exits, right, I think it's still work in progress, right? So what are the opportunities? Let's look at it, right? One is IPO in US or IPO in India. Both are possible. If you're going to list in India, it's primarily a profitable story. Can a SaaS company or a B2B marketplace, can they turn profitable, right? And many of them are, okay? If they do it, India is a big listing opportunity. If it's a growth story, a global market, obviously US is a better market, right? So both avenues are open. But I think another important thing which is coming up is secondary sale, right? So if you are invested as an early stage fund for 7-8 years, and there are a lot of late stage secondary buyout funds and PE funds whom you could sell to for early stage investors, okay? Obviously, that's not a full exit for a company, but that's the third option available apart from the M&A strategy community.
Nishant, you want to come in with your views on this?
Yeah, absolutely. And I think Mohan laid out sort of all three options well. And one of the things that's very importantly different between B2C and B2B is B2C tends to be a go big or go home, right? Winner takes all kind of market. There's one leader that kind of emerges, or maximum two. Whereas B2B doesn't tend to, need that, right? There are exit opportunities along the way versus, only the one who's sort of winning at the end. The other piece that's really important to kind of process, because it's really snuck up on us in the last year and a half or 2 years, is just the pace at which these companies are going, right? So we have now 33 unicorns in India. Of them, 13 are actually B2B companies. And in 2019, 70% of the unicorns that were there were actually B2B. So it's been a very quick shift where people have started to realize that there's proof points, whether it's like a Freshworks and iCertis or Dhruva, which have scaled well and are seeing sort of follow-on rounds and exits. And so that's, I think, giving people confidence that more such scale companies can be made out of the India. And the unit economics that it offers, between an India and a global play are massive. So that makes it much more probable for an Indian company to get acquired and have a good exit compared to, a Silicon Valley company, which is burning a lot of money. And hence, there's more risk associated with it.
You were, of course, Nishant, the ex-global CEO of Freshworks, India's first SaaS unicorn. Now, all this talk is there that, the number of unicorns that we'll have in India, the majority of them will be from SaaS. It seems as if SaaS is the sector that is going to be hot this year, at least for some time. Would you agree with that? And, coming from Freshworks, you must be really difficult to get a check from for a SaaS company.
Yeah, no, I think we're very bullish on the future. And that's why we've kind of, we put all our eggs into one basket, right, which is B2B SaaS. And we really believe in this wave. And I think, like I was saying, the fact that these unit economics are there's about a 5x, difference in per capita workforce cost between the US and India. Or, Freshworks, one of the things that we really mastered was the inside sales motion where you're selling from here into, US or frankly, all global markets. For each dollar amount spent, we were 3 times more productive than peers in Silicon Valley, right? So if you can get that motion going, and not all SaaS companies can, you can create sort of very, very powerful unit economics that actually help you scale fast. And I think that's the journey. That's why people are excited about the SaaS journey from India in particular, because you have talent, you have unit economics, and now you have product talent that actually knows how to build these SaaS companies. There's about 100,000 SaaS developers now in India. There's 1,200 repeat SaaS founders. So now the ecosystem has reached that scale of maturity where this is just going to go faster.
Okay. So now, let me come to you, Mohan. It's a question that all the SaaS founders, the B2B startup founders will want me to ask. So let me ask it. What does it take to get a check from Avataar Ventures? Like, what is it? What are the three things that a startup must have, according to you?
Yeah. So I think the stage we come in is like Series C, right? So I'll put that in context. So we expect the company to be close to $10 million in recurring revenue, right? That's pretty important. Or more or less, like, would we pass if it's 9? Probably not. Okay? So that's number one. Number two, the management team, right? The team is very important. I tell you why team is very important is what we found working. Look, I've been working with entrepreneurs for the last 10 years, right? There are CEOs with growth mindset, okay, which means they will look at every opportunity available, whether it's in India, Southeast Asia, Middle East, Europe, or US, right? At the journey, the founders can get stuck at any point, okay? Doesn't mean that if you hit 5, you're going to hit 10. If you hit 10, doesn't mean you're going to hit 20, okay? Similarly at 40, right? At every stage, you're going to hit a barrier. So the founder needs to have a growth mindset, okay? Which means, why am I not growing, okay, if they get stuck? Should I expand geographically? Should I expand products? Should I have top management team? So that's very important because a lot of CEOs and founders don't hire people better than them, right? They are very reluctant. It's going to cost money. So we look, it's not easy to judge. We got to spend time in multiple settings, and many times you get it wrong, by the way. Do they have that mindset to break through this logjam if they face, right? That's a very important, I would say these are two top items, right, which we look for. The market size, the competition, all that is important, but the first two are very important for us.
I think the third might be just a repeatable go-to-market, right? Because at this point now you're actually accelerating growth. So there's product market fit already achieved, and so you're starting to see the signs of a repeatable go-to-market, whether it's on the sales and marketing side. So that might be the third.
It's always good to know the do's, but I think it's equally important to know the don'ts, right? So I'll let you both answer this. Let's come to you first, Mohan. What are the don'ts? Like when you look at something, you're like, oh God, no, never will I give a check to this startup.
Look, I think that depends on when a founder comes and pitches to us, right? There has to be a clear story of what is the barrier, right? Is it a technology barrier? Is it a market barrier? Or is it the management team? Okay. So we look at, have they understood the market, right? If somebody comes and tells me, look, I'm the only player in town in this market, which many people do, by the way, okay, and say there is no competition, I think they have not done the work, right? What it does sends an alarm that, they have got into the market, but do they know their competition? How fast going to come at them, right? So we look at their understanding the market, understanding of the competition, and articulating that very well. If they can't, right, it raises a red flag. Okay, that's number one. And second, we look at how much capital they have raised and burned through, right? If somebody has burnt a lot of capital, right, and our benchmark is, if you have raised 50 million of capital, at least they should have had 20, 25 million in revenue. At least the ARR should be half or 1/3 of the capital raised, right? And so if they're not, that means they're not conscious of the dollar they're raising, okay? Which means they're going to dilute us significantly, okay? After we come in, we'll find it raise another tons of money, it's going to dilute heavily, right? So I think these are the red flags, okay? There may be many others, but these are the red flags for me.
Yeah, I think that sustainable growth mindset is important. We're neither looking for, burn and grow at all costs, which tends to be a more B2C model. Neither are we looking for folks who are, over optimizing for profit, because in that case, then, you don't take the risks at the right time. So, we typically look at a rule of 40, which is a combination of your growth rate and your profitability to see, how well our company's growing. And so that's, one of the yardsticks we use. The other don't would probably be just, a risk aversion to trying new things, right? I think that's something as we talk about, we spend a lot of time with companies, even that if we don't invest, just giving them our thoughts, giving them our advice, giving, what we have learned, what we've seen work, what we've seen fail, and just seeing how they respond to that is an important piece because, just because you tried something and failed in the past doesn't mean you can't do it properly now again. And so, that's something we look for, which kind of comes under the growth mindset Mohan was mentioning.
In fact, we don't talk enough about failures. We only talk about the success stories. But, that's a completely different conversation. We are out of time, gentlemen. I'd like to thank both of you for joining us on this edition of Startup Central. Congratulations on the fundraise and look forward to many more interactions.
Thank you, Nayantara.
Thanks for having us.